and which was a very passive product. So we saw some demand from some people asking for it, and they want to do an own allocation, and they wanted to do along. And but the rationale behind that was that people were thinking there is a story that will play out for India in the coming years of time. Ideally, Nifty 50 represents the top 50 companies, and India being a domestic consumption country, the whole basket of this 50 will move properly. You made a very important point. The arbitrage between the is very less, in fact, because all analysts are following the top. But just on the story side, what do you think on the country story side? Will it play out in the next coming years? Ideally, if I look for Nifty 50, it's like a growth story of the country only, basically. So in the next 10 years of time or 15 years, where do you think these companies are moving, or the basket of these companies is moving?
Let me not give my view on this. I mean, if you look at what economists and people in the financial services sector worldwide, what they are saying. The expectation is that there is a very clear-cut India growth story in the next 20 years. So you made a very valid, pertinent point that India is largely a consumption story, internal consumption story. So our exports were last financial year, it was about $420 billion. Goods export, and services export was about roughly $200 billion or so. So roughly, it's not a small sum. So $600 billion plus is what we are currently exporting in goods and services. It's not a small number. However, our GDP at this point in time is $3.53 trillion at this point in time. So which means that bulk of it, more than 80% of it, is coming from internal sources. Which means it's an internally driven economy more than an externally driven economy like some of the Far East countries. So even if there are disruptions that are going to be there, which currently we are experiencing, there are logistics disruptions, there are war-related food supply disruptions, crude oil prices have gone up, which of course has affected India. So to some extent at least, or to a great extent, India is insulated from these things, because though India is not exactly a manufacturing powerhouse the way probably China is or maybe a Germany is, but at the same time, if you look at the industrial base that India has, is I think at 5th or 6th in the world, the industrial base. And so if you look at the manufacturing capacity in the country, it is very much there. Okay, so the manufacturing capacity should go up, the quality should go up, the number of goods that we are manufacturing should go up. So all those things probably will happen in the future. But I'm just saying that the times are good. And let me give you some numbers. Even in the COVID times also, if you look at the GST numbers are a reflection of what is happening at least in one portion of the economy, which is actually paying the GST. So there is a talk saying that one portion of the economy, there is a K type growth, where one portion of the economy is growing, another portion of the economy is not at all growing. So it may well be true, but at least one portion of the economy which is paying GST, that is growing well. And if you look at the past 3-4 months of GST collection, it's above 1.4 lakh crores. And if you look at the advanced tax collection figures, we are talking about double-digit growth, and not simple double-digit growth. 35% growth, 40% growth, 48% growth. It's massive numbers. So what we are seeing now, we have reasons to believe that this story will continue probably in the future as well. If you look at the infrastructure sector today, while infrastructure may not be a great investment story today, but infrastructure is currently being created. If you look at the road and rail network, it is being created at a very furious pace. Last I heard was something like 30 kilometers per day or something like that. I think it has gone up from 30 kilometers to close to 40 kilometers. That is what Mr. Nitin Gadkari was aiming for. So whether it has gone to 40, I don't know, but it is ahead of 30. So infrastructure is a major lever for the country to do well, and we are doing that really earnestly at this point in time. See, I would say all these things are boding well for the country. And of course, we also know about the so-called demographic dividend. We are one country where the number of people in the working age and the number of youngsters probably below 25 or below 30 is the maximum in the world. So the population, we just have to leverage them properly. We just have to skill them, train them, and use them properly. And there is an effort which is going in that direction. The effort needs to fructify, bear results well. But I'm optimistic that all the entrenched players today in every field, whether it is banking or whether it is manufacturing or whether it is any other field, can potentially do well. So one last point is that for various reasons, China is facing an exodus of companies which are moving out for various reasons. They are creating problems for others, and others are now understanding that being in China, in one country, may not be the best way to function. As far as global supply chains go. So they are now de-risking, and they are bringing the supply chains to various other countries, like be it Vietnam, to Philippines, to India, to Mexico, to Poland, to various countries. So what is happening is India is also going to be a beneficiary today and going forward of companies which are moving out of China and into, probably I'm not saying that the companies will lock, stock and barrel move out of China, while some companies have moved out of China, lock, stock and barrel. Many companies will de-risk their production centers away from China into other countries, and India is definitely going to be one of the beneficiaries. I'm not saying that it is definitely going to happen, in the sense that it is a foregone conclusion. If we play our cards well, I think it will happen, and I think the government is cognizant of that fact, that nothing will happen just like that. We have to create an enabling environment for that. Yeah. The other thing is defense manufacturing. There is a lot of fillip given to the defense manufacturing. So at one point in time, Government of India had said that $250 billion is the defense purchase in over a decade. $250 billion. If a good portion of that, maybe 50, 70%, 80% of that is from the Indian companies. One is, of course, we will build a excellent military industrial complex. And secondly, so many industries will come up, the capabilities will be built, and so many people will get jobs. And the PLI scheme is also, currently on the cards. Too early to say anything about that, but the intentions are good. So for all these reasons, I'm fairly optimistic that India will continue to do well in the years to come.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.